Hi, welcome to the Market Alert for Wednesday, the 24th of April 2024. So US stocks gained after weak PMI data spurred a dovish reaction. So one economic news item again changing the face and landscape of rate cuts or rate increases. That's all that's required just as an excuse to move the markets. I always recall the very early days back in the sort of 1992 times before the internet really got going. And the opinions that the FT used to put out were no different. The only difference there was that they used to phone somebody on the trading floor and ask what moved the market today, justify the actual move. So no surprise there whatsoever. Stocks bid resumes on weak PMI data ahead of key earnings and other data as well. So again, rear view, dovish PMI metrics, and that's all that's required to bring the market back. Economic news today: German business info, core durable goods orders and durable goods orders month on month. So nothing again of any major significance for the markets today. So expect them to continue to move to the upside on any news that they can actually garner from the internet, which the algorithms go looking for. Let's have a look at the reaction to this so-called dovish news yesterday and kick off with the Dow. So in the Dow, since Friday, the market has continued to move high. You can see where the market bought in, and now we're heading back. We're above the 20-bar moving average and the 5, but the 50 is giving the market a bit of grief overnight, but not a problem. We can soon sort this out. We're still above the 200 MA in the daily chart, so the market is long. And also we're above the DP overnight as well as we were yesterday. And if the market's above the DP, the daily pivot, then this is classed as bullishness. And that's exactly what we saw yesterday in the Dow. And this is what we're seeing overnight as well as the market approaches yesterday's high for this market, which you can see there. And that high obviously tying in with the 50 EMA in the daily chart. In the German DAX, similar picture here, the market continuing to move to the upside also. We're just drawing some fibs there. You can see that we've just gone through the 62% retracement. The next upside target is the psychological level and, the recent resistance level, and also the 78% retracement there in the fibs. Market already above the highs of yesterday on the overnight as well. There's no reason why this can't continue. Again, you see the market above the DP. We're above the DP. We're also in the 30-minute chart. If we just have a look at where the 200 MA is, got the 200 MA, 50, 25, all in the right order. Market moving to the upside. That is a classic case of the market being bullish there, and also above the high of yesterday, which is a good thing as well to keep the market moving to the upside. And then the R1. So this market is attempting to get back to its all-time high of 18,569. But in between, there's a couple of obstacles at 78 and 89. And the 89 one is at 18,440 there. In the S&P 500, similar picture, massive volume for Friday's Israel retaliation, and the market moving off the 89% retracement there as on the downside, and on the upside heading back to again these sorts of areas here, which again tie in with the averages there. In the 30-minute chart, market up, as you can see there again yesterday, above the DP, above the 200 MA, above the DP, above the 50 EMA, and also above yesterday's high as well. The FT 100 is interesting overnight as well as it continues to put in new all-time highs. And you can see there 81.6.5 as prices continue their move to the upside. A bit of a spike overnight as well. I don't know what's going on. Interestingly enough, though, we had a bit of a pullback there, but down to the DP again. You can see this pattern. You know, you want to be thinking about the long side when you're above the 200 MA and the 50, 20, and the 5 as well. Change in tack, US dollar down yesterday, which meant this was a decent move for not a decent move, but a recovery for the metals, which we'll take a look at now. So in silver, we can see some demand coming into the market. Yesterday we got D there for demand. We traded down to 50% retracement, or just below, between 50 and 62. So some buying coming into the market. The daily chart looking oversold there. Is this the end of the pullback and retracement? Yesterday we're down, and you can see down to the S1 before the market recovers. And again overnight we're above the DP at the moment, but struggling with yesterday's high. The market's starting to show a bit of weakness there for silver. Meanwhile in gold also we've got a bit of demand there as well, and what we mean by demand is that the volume is greater than the previous day's volume, and the range of the bar is less than the previous day. So the fact that it's putting the brakes on shows a bit of buying demand there. 30-minute for gold, again you'll see exactly the same thing, where we came down, retested, and had a shakeout, got rid of the selling and brought the market back. We then had an 89% correction down to the DP, and now we're currently above the close, and two of the averages, the 5 MA at the moment is just below there, but above the DP and the close, and trying to get back above yesterday's high, which in the gold silver ratio, the market still moving to the upside despite yesterday coming down slightly. So again, still expecting this to move more to the upside than the downside. Let's just have a quick look at the volume that was required to move the market down on Monday. And now you can see, what did we have? 151,000 contracts. The big slam the other week was 227. So still fairly high compared to the previous days, and required to hammer the price down $1.50 during Monday's session there. Right, before we conclude, let's have a quick look at yesterday's trading session in the German DAX and what's happening overnight. So in the pre-market yesterday, price is sideways, trying to get back above the high before the cash market opened, which they succeeded in doing so. We then had all of the flash news. You can see the market trading up to the R1. The news was then released, and the market then reacting with a potential buy signal that was then superseded by a sell as the market moved down to the 200 MA. Price is just touching this level before bouncing back and then trying to get back above the high as well. More flash news, market trapped between the high and the 200 MA, and then moving back to the upside of these levels before prices became sideways, and the final flash news there being released back to the 200 MA, and then trading in a range before the morning session ended. And then of course the coast was clear then of news, and the market moving back to the upside, back above the high and straight up to the R1. So a lovely move back up, but obviously during the release of the news the market choppy. And then into the afternoon, mid-morning, the market was brought back, and then before the Dow opened, the market was moved back to the upside with the futures boys and the early traders coming in around the 1:30. Then we get into 2:30, market sideways, and we then see a potential sell signal which is filled, but unfortunately the market reverses and they want to keep moving it up. The PMI news was interpreted as good and dovish, which was sufficient to move the market back to the upside, up to the R2, and following the Dow and the S&P there before we went into the close, and prices then continuing to move higher with the US markets. So what's happening overnight? Well, let's just have a quick look and see what's going on. So in the 2-minute chart, if we just compress the chart, you can see we're above the high. We've already got the averages in the right order there. Just a matter of how the market interprets. No news today, which I suspect they'll do quite easily in moving the market back to the upside and continuing that move overnight, whilst there's no FOMC, CPI or non-farm payrolls to be had in this week. And I think we'll probably go back to CPI next week, but we'll have a look at that in Monday's market alert. So with that, let's see what happens today. I think it's a pretty foregone conclusion that the markets are likely to continue to move to the upside, barring a few pullbacks, unless there is something of a geopolitical news or nature that comes into the market. But that would only be temporary anyway, because it's about keeping the illusion live that everything is fine and dandy as far as the markets are concerned. So with that, have a great day, and as ever, thanks for watching. See you in the next